This podcast is powered by PKF. PKF, your trusted advisor in the Hunter for over 45 years. Down to Business acknowledges the traditional owners of the land and waters this podcast is recorded on.
Hi guys, welcome to another episode of Down to Business. I'm your host, Andrew Beattie, and joining me today is Ben Henri of Atmosphere Capital. Welcome, Ben.
Thanks, Andrew.
So Ben is a bit of a, I've known Ben for a long time. He's been a long-time banker. That's banker with a B. Massive Geelong supporter, tragic Raiders supporter, father of three, and probably his most important role as husband to Teresa. So he'll give you a bit more of a background. But Ben in Atmosphere Capital, most people would know as, finance brokerage. But we're going to unpack that a bit more today and understand a lot more about, that aspect and how he helps businesses and business owners start to achieve some of their goals. But by way of background, Ben, you can do a lot better than me. Yep. Tell us a bit about your story and how you ended up, all these years to now being in Atmosphere Capital.
Yep. So thanks, Andrew. Thanks for having me on. So long-term banker at ANZ, so 15 years in commercial. So worked up and down their segments through the commercial. I was in different roles there. So started off at the ground level, built my way through dealing with small customers up all the way up through to large customers. So if a business owner comes to ANZ and they're looking for work, they're looking to buy a property, anything really what they need finance for, that's what we call commercial.
Yeah, right.
So if you off the back of commercial, you got residential. So if you got a home loan, that's classed as residential.
Mm. So you started through the segments and
So worked my way through there. Had some good support throughout the bank, built good networks. Got into management. Also with ANZ, did a lot of travel. So I worked in a few locations, Newcastle, Tassie, and Sydney. So ended up back in Sydney in management roles. So I spent my last 7 or 8 years looking after some big teams at ANZ. So still in commercial. That's sort of a quick snapshot of background there.
So in 15 years, you would have started, early 2000s.
Yep.
Would have seen a fair bit of change happen during that time, no doubt.
Yeah, we did. Look, it used to be working in the bank was a lot more enjoyable back in the earlier days. It became more regulated and more focused on just making sure if there was any sort of chance of us not doing the best thing for the customer, that was ruled out. Not that I ever saw that. ANZ, for example, I thought was very good at managing their customers in difficult situations. But just over that time, you've also got disruption there, different lenders coming in. You got crypto. They were using some of that technology in the background through the banks, which they're still trying to use now. Being able to do things electronically. So just with the banks, you'll often see it's small step changes. It's not like bang overnight, we've got a big change. It's very subtle over a long period of time.
And I guess one of the biggest things, again, from probably more of an advisor-consumer point of view, I would think from a banking aspect is really that, call it relationship management. And, I still remember back to when inspired me to get into business, when my parents, small business owners and, always struggling. But the one person they saw as their, an absolute up there with any other advisor was their banking manager.
Yep.
That's really changed over time, hasn't it? So, in my view, a lot less of this face-to-face, actually a lot more encouragement to go online or phones, etc. But that whole customer service piece, I'm not saying there's not a focus on customer service because obviously these are big organisations, but it's certainly changed.
Yep. I think the banks look at customer service, and if they can give that without having a human at the end of it, they'd prefer that. So they've really developed a strategy around sending people through to automatic solutions. So if they can do that quickly and the customer's happy with that, that's works. Where I've found it struggle is with business owners in commercial. What they're generally looking for is not off the shelf. Every single business customer, in my experience, is different. Yes, they might look to buy a similar product or asset to another customer, but how they operate, how they generate income and money differs with every customer. So when you're talking about customer service for business customers, I think most of them like to speak to people. And that's where I think the banks haven't got that quite right, because they've dropped down the support levels for your relationship manager, or that person that your parents were talking to. They might have had an assistant manager back in the day. Now, most likely that person doesn't have an assistant manager and they've got to run everything themselves. So it's become challenging in that space, I think.
Yeah. No, well, mate, I couldn't agree more. And as a business owner myself, well, my banker probably doesn't want to be just contacted as much, but absolutely does get contacted and is a go-to person. So I guess, you've had quick background there. You've had, I guess, a lot of success to be in the bank that long and be promoted and put into different roles, etc. I imagine the future, was pretty bright, especially along that management side of things. So you've taken a zig rather than zag, I guess, and gone into, I'm going to be a business owner.
Yep.
Okay, so tell me a bit about the decision around going into business.
Look, as we spoke about, there is change coming, and I think it's going to be slow change. So what I thought at that period of time was there's a really big opportunity in finance to be able to do things a little bit differently. As we've seen across this sort of last 20 years, using finance brokers has significantly increased. Where I don't think there's a big, a large contingent out in the market of finance brokers is commercially trained and with that knowledge and skill base out there. So that's where I thought there was a bit of a space in the market. Along with that change that's coming, and the future change could be more rapid over time, I think, as well. I thought that was a real opportunity to start to grow a business in there. I sort of just took the leap of faith and thought, yep, I think I can do that. Where I also thought it'd be more enjoyable than what I was actually doing is that with customers, you can only service them in the banks for a small piece of what they do. So if they come to us in a segment, it's called a segment, you might be restricted on their lending, you might be restricted on product, you might be restricted on a whole range of things, not only because of the segment, but also the brand that you're working under. So, for example, at ANZ, they might have a policy that's different to Westpac, and Westpac might be able to help your customer and you can't. So going out into the market space, I thought, there's a real opportunity for change that's coming and to be ahead of that change. And I also thought there's a real opportunity there to help customers and build long-term, long-lasting relationships. Where if things change in their business, you're able to be the main point of contact throughout that change. And I think
especially so you're not, I guess, at the whim of a bank policy or
correct.
a new management coming through and changing things.
You'll see, and that's something in banking. Every so often they'll come out and they'll stop doing something. They'll make a big change in policy and they no longer do a certain style of business. A big obvious one that people might be aware of is super fund lending. So 15, 20 years ago, all the banks were doing super fund lending. All of a sudden, none of the big four want to do that.
And is that just a risk?
They would have come through and said, look, we don't want to be the first one to close down a super fund. Let's just pull away from it. It's not our core market anyway. And then, as we said, with disruption, other players come into the market. So whilst the big four don't do super funds, there's other players that jump in and they're able to do it. But it's just an example of where a bank is doing something, all of a sudden they're not doing it. Now, how they manage that is they just increase price. So I'm coming out, I've done a few super funds where the prices are 3-4% higher because it's difficult to move, but they don't want to do it anymore. So it's a challenge for the customer in that position often because they're not going to go and build a number of different relationships outside of their core bank. And that's sort of where we can come in and help as well.
So effectively, I mean, I'm in advisory and now, we like to think we're the trusted advisor from a point of view of understanding, what clients are trying to achieve and helping them along that journey or connecting them or providing the right advice, etc. You're effectively doing the same thing in a funding sense.
Yes.
Whether that be debt, equity, etc., to help them achieve what they're trying to achieve.
Yep. Yeah, exactly. There's lots of occasions where if the customer was just dealing with one financier, they wouldn't be able to achieve what they want to do. And quite often that financier tells them they can't do it.
Mm.
So I've been on the back end of that where customer gets told by their bank they can't do it, and they're at a loose end to know what to do. And quite often it's a nuance or a little thing that we just need to get a handle on to be able to either get it through with the existing financier or look to another option. But it's can be complex in certain ways, but it can also be simple if you've got that breadth of knowledge across the industry. And as I said, it's not really in a business owner's wheelhouse to be worrying about that. Often it's like, I've got to do something, and I'll go to my existing bank, and if they can do it, I'll just keep going there. And then, as I found over the last couple of years, that the main thing that I get involved is when someone is actually doing something and they need an outcome. So they've gone and bought something thinking it's all okay, and then they hit a couple of snags, and then they come to me. So most definitely in that consulting piece, I do feel like we add significant value.
Yeah, and I guess that's, and we'll get to the specifics of Atmosphere Capital in a minute, but I guess, you would get a lot of reactive stuff. And I think in my experience, I haven't been around that long, but even though it looks different, but, like for the years I've been consulting, there's a lot of the time people don't consider looking at another bank or even a broker full stop, unless they're up the creek, basically. Something's gone wrong, as you said. So it's quite reactive. I mean, I think from working with you, and not just a plug, but in all seriousness, you get involved even when there's nothing going on, just meeting people, understanding what they're trying to achieve, and giving them potential options for when that time is. So it's a proactive stance to ensuring you've got, whether it be working capital or funding, be able to complete an asset purchase, whatever it may be, which realistically is a key part of your advisory team.
Yeah, because if you can get ahead of the game, it's a lot easier. And like most things in life, if you've planned out and you've got your course of action ahead of you, it makes it a lot easier. Also, often it doesn't happen like that. Opportunities come out of nowhere. Things like that happen, but where we can get a sense of what's going to happen in the future. Typical example would be someone wants to do a property development. Thinking about getting finance in those situations can sometimes be left to right to the end, which is really makes it tricky. So it's about, with those sort of customers, we're often having conversations with the banks well before they would generally do that, just so everyone's lined up. Because in those situations, again, each bank will want something slightly different. So if you're ahead of the game, it becomes a lot smoother down the back end. But if you can get ahead, also it's just building. It's about that relationship building piece. So if I've got good communication with my customers, and we like to include the banks because we sort of work together. That's sort of our model. It's not trying to bash out an answer.
And that's what I was going to, one of my next points to raise is a lot of people think that, how come with a broker, then I don't deal with banks full stop, or we set these businesses and we're bashing the banks. It's far from it.
No,
I mean, the banks are still they're such a big part of our economic cycle. And I've seen working with yourself that you actually work closer with the banks than probably anyone else. Yeah,
I think it's important because like my business is around relationships, and that includes my suppliers, which is the banks, the financiers. So you got to have good terms and conditions with your suppliers, so they want to deal with you as well. So most of the time we're working together, and what you'll find as well is that a lot of the challenges that relationship banker you're dealing with is a face-to-face contact. They're not making the decision. There's other people behind the scenes that are making decisions. And the banks are set up in certain ways that you need to challenge decisions at times. And one of my challenges in the banks is that a lot of people don't like to challenge decisions. So they sort of just go along with the flow, and they don't understand how to challenge and what to challenge with a decision-making process. So that's where it's understanding that process and how they operate is really important. So generally speaking, if you've got a business and you've got a banker, you'll find that they really want to help you. A lot of the time, they're the ones who've got their arms tied by someone else who they have to make a joint decision with.
Well, and I think it's the one that the delegated authority levels have certainly changed. As you said before, the resourcing. And the other thing that I think has certainly changed from, I think most of the viewers have heard me say before, I was in banking, feels like an eternity ago, but, or not all that long ago, but the training was exceptional. And I think that's dropped off a lot from, the type of training, because they're not making credit decisions at the front line anymore, etc. So that understanding piece, you said what to challenge. I also think understanding properly where a good credit is versus a bad credit, or what levers to pull, etc. It's maybe it's not a lost art, but it's becoming rarer, depending on the level of banking you're at. And I think having as you said, a really good finance professional or funding professional that understands not only how to write an application, but truly understands the key things of lending money and getting it back, and pricing and security structures and the rest of it. It's a really important tool to have in your kit bag, I guess.
And even the thing that you touched on with delegation, so they have pulled that back, but even where it's available, the bankers may not want to use it because they get audited on the decisions they make. Whereas if they do a joint decision, they there's not as much pressure on them in terms of a compliance down the track. So I've seen that in managing people, that they don't want to make decisions on their own, just because of the way that the bank looks at success. So quite often, if you get one strike on your name working in the bank, that's worse than bringing in 10 new customers. So the bankers are hesitant to use that themselves. So back to your other point, if you're presenting good credits where they don't think there's a risk for them, utilising their own delegation, again, you can use that to your advantage.
Interesting point. So let's move then on to Atmosphere Capital. And Atmosphere Capital's 18 months now, thereabouts?
No, we've passed our 2 years.
2 years, there you go. So, I mean, most people look and go, okay, it's a finance broker. But realistically, we've just been through some of, I guess, the skill sets that are brought to the table. But, you've obviously serviced the different areas of debt. I mean, we've mentioned commercial, but maybe expand on the types of segments you play.
Yeah, so the view of Atmosphere Capital is we're relationship-based. So way I look at that, and it probably sounds a bit catchphrasy, but it's more around looking at the people you're dealing with and what needs do they have, and us being in a finance mindset, and then looking at what can we provide solutions for. So a lot of brokers will be set up and they only do something in that suite. They might only do commercial, they might only do home loans, they might only do car loans, they might only do personal loans, for example. Whereas we take a view, if the customer needs something, let's just get it done for them. It's if you look at it simply, it's just money they're borrowing. So so with that in mind, we do everything for a customer. And as I said before, also with opportunity, you can't pick and choose which one of those are going to come up first, or which is going to be, you might prefer something, but it might not come up until 6 in the line. So what we've discovered over the last couple of years is if a customer needs something, that's the most pressing issue for them at the time. That's generally when we'll get involved as a first time. So if we were able to take care of that, build a relationship, show them we can execute, then it's a good way of getting confidence in what we can deliver. So Atmosphere Capital set up with a relationship mindset, looking for to be able to successfully provide solutions to all funding needs for a customer. Now, as I said before, in the market space, I think there's a bit of a gap in terms of commercially minded finance brokers. So we do have a goal to grow a model. We're not looking to be just a one spot, one person operation. We're looking to grow, bring in people who've got a skill set that suits being outside of a bank, for example. So bankers who will be able to, same mindset as us, and deliver outstanding results for customers. So, that's sort of the end goal that we're looking at doing.
And you'd imagine there's real opportunity there because some of the stuff I've read around the future of banking, I guess the buck. It's about really getting their cost of service model down and actually pushing more work to brokers because so many have gone that way.
Yeah, I've actually had referrals from bankers as well. So it's a bit of it's one of those things. I feel like the banks are looking at the numbers rather than what can be done if you provide a service. I think there's a lot of stuff that the banks miss out on because their staff haven't what they need. Like even back when you were in banking, you would have been out doing a lot of BD work.
Yeah, absolutely.
Now you'll find a lot of the bankers don't do a lot of BD work. They either are relying heavily on brokers who are doing the BD work or are able to get through with not doing anywhere near as much as what they used to have to do.
And BD meaning business development. Yeah.
Sorry. Yeah.
No. And so, so very much around Atmosphere Capital's all funding needs. So we're saying commercial and within commercial, whether it be asset purchases, working capital, equipment finance, data finance, right? Residential, because obviously, and I think that's a good point to make. Your real skill set is around commercial and that gap, as you said, but you want to be a holistic solution for all clients.
Oh, yeah, exactly. And I always think if you can deal with one person, deal with one person. If one person can take care of your needs or put you into the right spot, you might have a bit of an umbrella approach where down the track, we've got people who do certain roles, but they only come through to one advisor to make sure that they look after every piece of the pie for them. So,
And I guess all those pieces really were around, a debt position.
Yep.
But the other key thing that I think many people don't understand, which I know Atmosphere does and probably good brokerages do, or finance solutions, is that debt advisory piece or capital advisory.
Yeah.
And the way I describe that is not everyone needs to or wants to change their financial, but you've said to me about this if we're talking rates, this loyalty premium, and even then if we're talking structures, if you don't challenge or don't know what to challenge, it often can be to your disadvantage. I know from my point of view, we advise a lot of clients on asset protection strategies or risk mitigation, and we want to get I guess cross guarantees and structures unwound. Yet the banks would love to tighten, and I get why. Talk about that debt advisory piece, and that's really, I imagine, a fee for service.
Yeah, we do offer that, and I guess customers are happy to pay for that when they see value, is what I've found. So, like you said, there lots of customers, they sort of end up with a structure that they're not comfortable with or is not working for them anymore. And when they discuss that with the banks, they're quite happy with the structure they've got. And generally don't want to change or find it hard to have those conversations to change, like I said before, because the front person you're dealing with has to go and explain that to someone else who in their mandates probably they're thinking we need to have the best interests of the banks, push and pull between the two of them. But yeah, absolutely. So there's been many occasions already where we give that advice and we deliberately look to stay where they are. And it's just making those changes. So that could be in structure, in security, in personnel. Someone might come to us and they're having real issues with their banker, for example, because that's changed. You've probably seen lots of customers have different bankers over. They can go, NAB, I won't say a name, but my bank manager's changed 5 times in 3 years. This last one, I can't handle it anymore.
And I think that's a great point, because I don't even know personally that you associate your experience with what you think of a bank, and that generally comes down to the banker.
Yeah.
We've got a great banker, so we therefore think our bank is pretty good. But that can change very quickly.
Yeah. And that's the big difference between commercial lending and residential lending as a starting point. It's very much relationship based as commercial, and your banker is what you think of your bank as a commercial banker. If you're a residential borrower, you really don't have a banker. You might have had in previously your branch manager, as we know, there's not many branches anymore. So you're, as a residential lender, your banker is your broker in most cases now. In commercial, it's your banker. So if that changes or policy changes or whatever, and the banker can't get you what you need, that's where you get finding that challenge.
Yeah, sure.
But in terms of the advisory piece, my mindset is if your best possible outcome is staying where you are, then that's what we're trying to do. Because you might have long-term history. You'll find their customers will not see the value in changing their transactional accounts and their payment structures and stuff like that because it's quite intensive and takes a long time. So that might be their main pain point, that they just want to keep that in place. And let's just see if we can get a better outcome on what you've got on your lending piece.
Yeah, sure.
So the overall package is let's stay where we are, but let's just tighten it up a bit.
That's good. Well, to me, the best way to describe Atmosphere Capital, it's a funding or capital solutions business. It's based in relationships, but more importantly, gives you a lot of options.
Yeah, 100%.
Should be marketing.
Yeah. Get you on board.
So then, if I think about especially for viewers to try and get their head around this, give me some real examples, without using names, obviously, but how you've helped and what some of the outcomes.
Yeah, so if we touch on before where we're doing some advisory work, the best example of that is a customer comes to us and they can't get a deal done with their incumbent bank. So they're pulling their hair out. They come to us and they say, Ben, we need to go look elsewhere. Now, that happens regularly, obviously, as I said, and also regularly we do move banks because they may not be able to do it. But where some of the really great examples of us adding value is that we can get where they've got a firm no from their existing bank into a yes, we want to do business. And not only do we want to do business, we'll do business on really good terms that everyone's happy with. So there's it's hard to say without going into exact examples of it, but we've had customers where they've increased their debt significantly. We'll take stuff out to tender for an example where their existing bank had numerous covenants. They're looking to do a development. They're going to, spend significant money improving their site. Existing bank had, let's say 5 covenants. We put that out to tender. They come back. They don't want to lose the customer. They go to one covenant. Just make it very simple for the customer. Based on, also with the banks, you've got to remember that they deal internally. The bankers don't go off and have a conversation with another bank and say, hey guys, what are you guys doing? What's your policy look like? Quite often these tenders are good for the incumbent bank to understand what the market's doing. So we can use that quite often to sort of change mindset within the bank where they think, we're already out on the edge. We come back with 4 different offers that look way more impressive on paper to what they're doing, and they go, maybe we should move a bit. So we've done a number of things like that.
I know, you've been quite successful getting, for argument's sake, unsecured facilities for business of a size that probably wouldn't traditionally get unsecured with banks.
Yeah, exactly. Again, that's being able to leverage relationships. That's a big one there. So we had a customer looking for a large amount of money unsecured, so $40-odd million in unsecured money. Based on, I would say that's, again, a very large relationship base because you get the customer, they're in a niche market. It's getting the banks to understand what they're doing, what security, albeit they don't have bricks and mortar security involved. Can we sort of say, right, they're putting the money into an asset that, albeit we don't give it a value, it does have significant value, especially to that business because it'll generate X amount of money for them. Utilising relationship, getting a really good understanding of the business, of the customer, of what they're trying to do. Another thing that you'll find, a lot of the customers we go and see say, I'm looking to expand, right? But my financials don't allow me to do that. I know that I can't do it, so I'm in a catch-22. I need the new equipment to be able to generate the additional income that I can use to then show I can pay back the loans. Now, this is another bit where if you've got a good understanding of the model, we can get stuff done for customers where we're utilising projections, which the banks, it's not their forte, like their number one thing to do, and they prefer to work off historical
actuals.
Numbers for obvious reasons, but they're definitely not closed off to the idea of using forecasting because it's a common sense thing, right? If you're going to buy 2 more machines, it's going to generate X amount more income. You can see that, and then if you've got the contracts there, or you've got a good confidence of where that income's going to come from, you can definitely do stuff.
Sure. So really, it's building up that those war stories, I guess, and understanding, you said the relationships, but what levers to pull.
Yep.
And looking at it from an outcome based. At the end of the day, you need to still answer the questions about how do we service this debt, and what's the security position, all the rest of it. So that doesn't change, but it's helping build that picture.
Yeah, 100%. And the other thing I find that adds value is we've obviously seen over a number of years a lot of situations happen. You might put in an application that gets declined. I've seen that many a time. But if you're the customer, you probably haven't seen that before. And it's very stressful. So I deal with customers and things don't go quite to script and to plan, and they're finding it very difficult. What I can bring is a understanding and a calmness around these situations because I've seen them so many times. And I understand how to get that from being declined to approved. I've got an example there. We've got a customer looking to buy a business. We've put an application. It's a really strong application. A particular person didn't agree and declined the transaction in the bank, and it took us about 8 weeks to get that overturned. I knew in my heart that would get turned around, but on the customer's point of view, they're going, "Oh, what do we do now? We've entered into a contract. We're looking to buy this business. We don't have the money. What are we going to do?" So it's just that understanding of the process, being through it so many times, you really know where things are sort of going to fall out, and then you also know the pivot points of and who to talk to in the banks to overturn these decisions, because a lot of the time they're not the wrong decision, or they can justify their decision. You just got to get the right people to also see your side of the view and come through.
Yeah, and I think what helps with that, in my way of thinking, is not only your relationships with the clients or the customers and also the banks, but with other advisors, such in some of these cases, accountants and lawyers and that sort of stuff, and making sure you're in the front foot with these people to be in the best position to put a case forward.
Yeah, exactly.
So, all right, so that's a lot about Atmosphere Capital, but turn up the heat and the fry pan now. You then got into business.
Yep.
So, I love these sort of things. People go into business, go, I can do it better. It's going to be great. So, as a business owner, some of the lessons you've learned very quickly.
Yeah. I had a strong mindset when I was leaving. I was just going to leave. I didn't overthink it. What I had at that point in time was really good support from Teresa, my wife. I think that's really important. So her father is an extremely hardworking man. So he's immigrated to Australia from Italy and worked in the fruit markets 7 days a week for 12 plus hours a day. So he's always just been a really, really hard worker. Anyway, he had an opportunity to start his own fruit store. His brother started one, and a lot of his cousins started fruit stores back in the 80s and 90s. But Teresa's mum was dead against it because it was too risky. How can you leave, start your own business? You've got a good job, you're earning good money, albeit you're working really hard. She just didn't want to take that risk. And needless to say, Teresa's uncle who started the business did really well, really successful. Everyone who started their own fruit store back in those days did really well. Not to say that Teresa's dad hasn't done well, but you just could see the difference between starting your own business and continuing down the PAYG path. So she always had that in her mind. So when I was broaching the idea with her, she was always very, had that there to go, yeah, I'm going to support you. It's going to be hard in that first initial period. So there was that piece there that was really comforting to me. So having that support there. And then also, as you get older and you look at where is the risk actually? I always remember, I can't remember who it was, but someone said, it's actually way more risky staying as a PAYG employee because you don't have your destiny in your own hand. So at some point in time, someone else will say, we no longer want you in our business. It's pretty much guaranteed to happen unless you're one of the lucky few that stay there and make their own decision to retire. So with that in mind, that was critical for me to move out. What I've found has been really good is just what you put in is what you get. Now, rightly or wrongly, people at ANZ might not have thought that. I guess they would say I was very efficient at what I did. So I did seem to have a bit of spare time compared to a lot of other people. What I've found is that I do significantly more hours of work running my own business. And it was one of my things that I thought about is have I got that behind me to be able to put in the work when I need to? But that to me, that's been a really good thing where I've been able to put in exceptionally a lot of work compared to what I used to do. But what I like about it is that I'm generally helping people. We're getting outcomes. And what I put in is what I get out of it. So that to me is really drives me to keep doing what I do. Some of the things I probably didn't think about was annual leave.
What's that?
Exactly. So having been working for 2 years, I haven't really had a break yet. So I'm looking forward to growing out the team to sort of have that break because people, as I said, they things happen. They don't just stop because you're on taking a break. So there's that, and it's just I probably haven't had the opportunity. You get in that business, and I bet you a lot of people feel the same way. You start your own business, and you're just doing the business because that's what you're doing. You're in there grinding away, working, and you don't get much of an opportunity, especially in this first couple of years. I feel like I'm getting a bit of time now to do that, but is to look more strategically at what you're trying to do. But for me personally, it was important that I felt like I needed to get in there, understand the nuances of different lenders because I was coming from a one bank background. I for myself personally, I like to understand process, understand how things work to get confidence, not only for myself, but when I'm talking to customers, I like to have that behind me because I'm pretty much, you get what you see with me. So I like to have that so I've got that authentic conversation that I've done it. Not necessarily the best way, but that's just the way I operate. So I like to have that behind me. So over 2 years, I have seen and done a lot of things that I hadn't done at ANZ. And now I'm just getting that time. Had a good strategy session with yourself, which I can recommend to anyone who hasn't done it. It was excellent. And it's just giving you that right. What are we trying to achieve now that you've had your head in the trough for 2 years and you're building up your business? What are we going to the future look like? And give you a few markers to sort of plan out. You know, if it's putting on new staff, we better start doing that now.
So it's a good segue. You mentioned the future. I mean, you know, and not just the future in a sense of where you are today and what's going to happen in the next few weeks, months, years, etc. But taking into account that whole banking and finance world, what does the future, you think, look like for Atmosphere Capital?
For Atmosphere Capital, I think if you look more broadly at the market, we've got a view that finance will be significantly different in the future. How long that will take, it's hard to pick. So I just put an arbitrary number on it and say, let's say in 25 years' time, everything that we do is digital. So if I've got a tax return, if I've got my bank accounts, if I've got pretty much anything that we do, someone will be able to tap into it. Someone will be able to get that information if we release it to them. So with that sort of mindset, I'm thinking the banks are going to look significantly different. They're not going to have many staff, if any. You're going to be a wholesaler of funds. Let's say. And we're already seeing brokers are the choice of that. And I think that's only going to get bigger. So customers want to deal with someone. The banks probably don't, in my view, don't want to have that expense in there. So we're going to take out that market. So Atmosphere Capital is looking to be the finance provider of choice for all customers. We're looking to grow out our model and have basically where we see it, we're going to have an old school bank in a new banking marketplace.
Which I think, more and more and more, it's nearly back to the future.
Yep.
More and more business owners particularly, but I think people generally,
yep.
they crave that relationship. They crave a trusted resource to be able to, this is what you've got to do. We're going to get it done, et cetera, et cetera. It's, so Ben the fruiterer for the finance world. Yeah. Mate, best advice you've ever received?
You did ask me that. I think,
or biggest lesson, either way.
Yeah, that's a good question. It's probably best bit of advice or lesson. I think it's just backing yourself. I think even when I look back now, I'm talking to people who are looking at doing a similar journey. They're working in the banks and they're saying, Ben, I'm thinking of doing this, and I find myself getting nervous for them, having been through 2 years. I'm way more nervous now for them than what I was when I went out because of
what you know.
Yeah, exactly. I didn't know what I didn't know. There's a bit of naivety there, and helped me in a way. But then I did actually start thinking about it. I'm like, you've just got to back yourself, because what you bring to the table as an individual, a lot of people will want to connect with. And everyone brings something different. If you can just lock down a few of the keys that most people will enjoy, so setting expectations, communicating well, or just communicating, letting people know where things are at to, and if you've got the skill base to be able to deliver, that's going to be important. So really, for me, it's just backing yourself. Don't overthink it. Because I think if people overthink it, yes, it's good to have plans and strategies and whatnot, but they can also paralyse you because you realise how hard it is. But I think a lot of people just need to back themselves, understand that they've got something about themselves that a lot of people want to connect with.
No, that's a good point. No, I think what helps that for a lot of the people thinking about that or might be in the same position is making sure you have some sort of support network, and that could be family, as you've already mentioned. It could be advisors, it could be friends or mentors, but that's a very good point. Mate, we've covered a lot and probably could keep going, but I'm going to try and wrap up some of these key points. So, I think, if anything, seeing that whole funding and finance function and someone to help you with there in a professional sense is a key part of life planning, but business particularly. It's not something that should be looked at just reactively. Being ahead of the game and make sure you have that plan in place, and that's not just planning what you want to do, but that's also information you've mentioned a few times, being in order, being in I guess communication and collaboration with other key advisors within a client circle. So making those links. It comes up every time we talk to anyone in this space. Relationships are all about business. So another key point there. I think a key one is that a good advisor in your space can deal with all funding needs because it's not driven by what the product is, it's driven by the client needs. So, making sure if you are using a broker, it's saying, well, why am I using them? What are they doing for me? What's the finance solution? And dealing with that myth very much. Banks are your key suppliers and they're also a big part of the client's world. I think the best way we've summarised today is that what you bring to the table is professionalism, relationships and options. Not being pigeonholed in one space. And it's not always about just refinancing either. It's just good, solid debt advisory or capital or advisory for that matter. Knowing that who can make what decisions and how to challenge those decisions, what levers to pull, that's a big part of what I took out of this. And I think it's a great one that clients, if they're not considering, especially in the current climate, they should be considering that. And every business is different. and you need someone that listens and understands that story rather than a one-size-fits-all. So I've probably forgotten more than I've mentioned, but I think there's some really good points. And I stress from a business advisor's point of view that, funding and whatever funding that is such a key part to be able to do everything else within the business environment that it shouldn't be neglected or treated reactively. It should be a key part of your success. So, mate, absolute pleasure to have you on there. Thank you for joining me.
Thanks, Bates.
Until next time, just cheers.